Hi, I'm Alvin. I'm the CEO of Dr. Wealth. I'm the trainer for Intelligent Investor Immersive program. I'm also the SGS Academy trainer. Today, I'm happy to answer some of the questions you have submitted. Let's start with the first one. What is your investment strategy? So I run a couple of investment strategies, and mainly it involves buying value stocks on one side of the spectrum, and the other is to buy growth stocks. So to some people, that value and growth stocks are very similar. They are joy and a heap, like what Warren Buffett has said. But for me, I'm more of a classical value, so I really buy those kind of dirt cheap companies that they are really worth $1 by buying you at a penny. Some people don't like that because they tend to be lousier businesses, and that's why they're selling at a cheap price. But sometimes catalysts can happen and certain events can unlock the value, and that can give you a very handsome reward from that. And on the other side, which is on the growth stocks, I prefer to do it on China companies as well as US companies where their growth trajectory are a lot longer, and that also can give you very long-term good returns, right? And I guess that's what most people are more familiar with. And I do both of them put inside portfolio because value and growth, they outperform each other at different points in time. And by having both in the portfolio, it tends to give me a better blended returns, right? So that is the answer to the first question. How would you advise a seasoned investor? So it's a good thing if you are a seasoned investor, you don't need a lot of help. But if I can give you an unsolicited advice, is that markets do change from time to time, and you need to probably tweak some of the investment process that you're probably very used to. I give you an example is that for the last 10 years probably, right, the economy structure has changed quite a fair bit, right? It has become a more technologically driven economy where intangible assets have dominated the economy itself, right? And if you use very classical value strategies like price to book, it may not be so good as a metric to value this kind of new generation of companies. So I do think that even as a seasoned investor, you need to be in tune and be flexible and adaptive. At some point in time, there might be a need for you to adjust your strategy. Okay, next question. What are your outside interests other than investing? Okay, so I do like soccer, like a lot of guys in Singapore. I used to play soccer, and that caused me to break my leg. And please take care of yourself if you're going to play. I do watch soccer, and but I don't really watch every single match. Right, it's sometimes too tiring to stay up late at night. I love drinking, right? Socializing over drinks. I like whiskey. And I used to dabble a little bit in investing in some whiskey, but I no longer do now because the house doesn't have enough space for me to hold a lot of those whiskey bottles, right? I also like to read books. Okay, so here are some of the books that I've like laid up on the table, right? But I love the Dilbert book most, okay, because it's so funny, right? And that's pretty much about it. And I spend most of the time looking at investments, right? Okay. How would you advise a beginner to begin? Okay, so we deal with a lot of beginners in our courses, in our interactions with investors, and I think the most important thing, right, is to really put your money to work. If you have never invested a single cent and you're just reading books or attending courses or watching videos, you can only go so far, right? You need a feedback loop, and that nothing beats putting your money at risk. And the good thing is that don't be afraid to lose money at the start, because usually as a beginner your capital is smaller. You wouldn't dare to put a large capital inside. So putting in, get some feedback, and then you will know whether you get the sense what kind of investing style or strategy suits you, right? Maybe you're more long-term rather than short-term and things like this, okay? Without investing your money and putting your money at risk, you will never be able to really understand what is suitable for you, okay? Next question. What is your self-realization about money and life? There are a lot of realization that I had over the years, and there will be too much to talk about. We probably need a few hours to share every single little thing. But I'll just share the most recent realization that I had was that I read a couple of literature or books and articles from the US, and there seems to be having this agreement that investing or whatever money decision you make in your life may not always be rational. So for a long time, I always think that money decision must always be rational. It must be decided on a spreadsheet. You must really think it through and decide objectively, not subjectively. But it was through reading all these things that I realized that we as humans are never 100% rational, and a lot of the money decision involves your family members, and that itself is going to involve some subjectivity, right? And you cannot be totally objective about money, okay? And that relaxed the stand a little bit, that's how I realized that I don't need to be 100% rational when I make my money decision, including investment. Okay, so sometimes we think that we need to be very quantitatively correct, but if you really love the stock, if you really have confidence in the business or the management, even though maybe the numbers doesn't suggest a very compelling case, you might want to take a bet on it. Okay? It might not be a bad idea, right? So that was my latest realization. Next question. What do you think of investing in commodities? Okay, so I think the latest trend is like inflation theme is coming back, and a lot of people are talking about investing in commodities. Buying commodities ETF would be the easiest way to get exposure to that. But I personally don't like to do it because commodities are usually traded in futures contracts, and these are derivatives, and they're not easy to understand. And for most people, I think they'll get confused about all the different expiry, different kind of strike prices. So even buying an ETF with futures contracts doesn't solve the problem because the rollover cost can be quite high. I think the best way to get exposure to commodities is to buy companies who are dealing with commodities. They can be miners, they can be traders, or any proximity with this commodity trade itself. Okay, so I think that would be a better exposure rather than going to those futures contract or even an ETF of futures contracts. Next question. Oh, I got two questions. What do you think of the current market in Singapore? Hey, so I guess a lot of Singaporean investors are pretty frustrated due to the underperformance of Straits Times Index compared to the rest of the other index around the world. And we start to hear people talk about, I should invest in US, I make more money, I should invest in China, I will have made more money. I want to defend Singapore a little bit, okay? First of all, if you're a dividend investor, Singapore is the best place to put your money because there's no dividend taxation. Unlike US, there's 30%, in China there's 20%, discount to you for this period is 10%, but in Singapore there's 0% dividend taxation, right? And Singapore companies tend to be more generous with dividends as well. So the yields that you get in Singapore are also higher. So if you're a dividend investor, there's no better place than Singapore. So it's not just that other countries have higher growth and things like this. If you're a growth investor, I understand. China and US will present a better opportunity for you. But if you're a dividend investor, Singapore is actually your best place. And if you're a value investor, you can also take it as Singapore stocks have not really gone up, and relative to US and China, it's a lot cheaper stocks to look at this point in time. So I would say don't forget about Singapore. Next question. What are some of the online resources you read daily? Okay, this is a very hard question for me to recall everything that I read every day. I have quite a lot of things, and one of the ways that I like to do it is I subscribe to emails, newsletters from people that I like to follow. Okay, so it is a diverse range. It can be investing related, it can be psychology related, it can be technology related stuff. So all sorts of places. And I don't like to visit their website one by one. And what I do is that I make my email inbox like a information center, and I subscribe to all those, and they just feed my email inbox. Okay, so I do consciously shape the kind of information that flows in my inbox, and I enjoy reading my emails. Okay, so that is how I do it. All right, and I hope that you can give it a try. For all you know, it can be a part of your daily reading habit. Is this the last question? Nope. Starting capital to take where you are today. Actually, I don't remember what was the starting capital I had. Okay? But what I know was that when I started working, I made saving a priority. So I always, that mantra of pay yourself first. I always transfer that saving rate that I want into another account, a separate bank account. And that was how I continue to stock money, and that's why I cannot remember what is the actual capital that I started with. And once it hit a certain amount, I started to invest by making the money work harder, and I just keep adding and adding over the years. So I think for most people it's like this, right? We don't have like a huge inheritance suddenly just drop on our lap and we can just deploy the capital accordingly. Most of us will start off working for somebody, and you have a salary, and that's how you grow your pot. Okay, don't worry about starting too small. I think it's more important that you start with something, and for all you know, after a while it amount to something bigger that you will be surprised yourself. Okay, so just go ahead and start. Okay, I think this is the last question. What triggered you to start investing? Okay, this story started when I was in year 3 university, and there was a time where my parents were forced to sell their house because they couldn't afford the mortgage anymore. My dad's CPF was zero. Okay, he cannot even pay the mortgage repayment, and there was another 15 years of mortgage repayment to go. And that was where I realized that my parents were not lazy people. They were gainfully employed for their entire lives, and yet just one silly mistake that they made when they bought the house without really projecting their finances, that they ended up in this situation. And that was where I realized that you can be hardworking, but if you make poor money decision, especially the big money decision, you will actually suffer a lot of consequences. And that really woke me up, and I really started to look at my finances, go and learn what are insurances and what are investments, and that was how I got interested, and I stumbled into it, and I never looked back from there on. Okay, no more questions. I'll see you the next time.